So the COT report dropped yesterday, and there's one thing in here that doesn't add up. And when something doesn't add up on the COT data, that's exactly when you need to pay attention. I'm going to show you what the large speculators are doing with their money right now. Not what price is doing, not what the chart is saying, not what news is saying. Simply what the positioning data is telling us right now. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. The COT report, basically Commitment of Trader report, is a weekly report from the CFTC that shows you what the large speculators, the institutions, the hedge funds are positioned for. And the reason why it matters is simple. These are the people who move the markets. So if they're building a particular position in a certain direction, price tends to follow it eventually. Now, to access the COT report, you simply go to the CFTC's website, which is the cftc.gov, and you head straight to Market Data and Economic Analysis, and you click on Commitment of Traders. When you click on Commitment of Traders, you'll land on this page, and you can scroll down depending on the market you trade. For those trading agricultural, petroleum, natural gas, you can select on any of this. For we trading the currency, which is basically finance, you can hit the long form data and see the data. Now this is the data the way it comes, and it makes sense. It's easy to read, quite good. However, it's quite difficult when you try to start to do the comparison against each other. For example, when you try to compare the card against something like the New Zealand dollar, you're going to find yourself doing something like this. The Canadian dollar is right at the top of the whole thing, and you can see everything that has to do with the Canadian dollar up here. But when you start to look for something like the New Zealand dollar, in case you're trading it, you get confused, because when you start to search like this, you will find it difficult to find that market. And by the time you finally find it, you realize that it is far down below. Hence, you cannot actually compare this data easily. So what happened? I kind of made this simpler for myself by running it through software and compressing it into a readable, easy table. Now, what do we have here? We're just going to look at what the data releases is, and we're going to see what is most probably happening in the market right now. Right off the bat, first thing I see here is everything went up. That is what you can see. And how do I know this data? So the non-commitment long is the amount of long positions or rather long contracts going on in the markets from non-commercial traders. Now, when I say non-commercial traders, I mean people who are trading for purely profit. There are commercial traders, which are people who are trading to hedge against the market, or rather hedge the market. Now, non-com traders are the people who we the traders or retail traders are focused on following. Why? Because these people are trading the market for pure speculative purposes. They are purely for profit, aka something similar with what retail traders are doing. We are in this market to make money. They are also in this market to make money. The difference between the retail trader and the commercial trader is that they trade with extreme volume. So they are the ones that place those large orders that lead to massive spike in price. And they are also the ones that tend to master the market because they've been doing this for years. They understand exactly how it works, and they tend to follow the proper underlying economics of a market, far more deep-rooted than what you and I retail traders can find out there on the table. If they are buying into a market, just know that some news is coming up where it's most likely going to fall in their direction. With that in your mind, let's analyze this table. What we have right here in the COT report data, we have the non-com, the currency market, that is the exact currency we're dealing with, the date, this is the date, May 12 was the last release, and the non-com longs, that is the total number of long contracts. The non-com short is the total number of short contracts from non-commercial traders, and the non-com sentiment is the degree of bullishness the total contract is. So when you look at how much long positions are compared to the total number of contracts, you will know if they are strongly or weakly bullish in the market. The change, also the commercial, non-commercial change, tells you what is the changes they made between their current position and their last position. Did they go up or increase? For example, taking a look at the Australian dollar, the current total number of longs from non-commercial traders is 38,000 plus. And what the change means is between the week before, that is May 5th, and May 12th, they added 15,000 more contracts to this. So if you go back to May 15th, May 5th, you should be finding something around the ballpark of around 23,000 long contracts instead of 38,000 long contracts. So that's what the change in NC long means. Same thing applies to the shorts. The changes in the number of short contracts. Also, the commercial traders, the people who are hedging the market, right? Their total number of longs, total number of shorts, just their total commitments, or rather sentiments based on their current data, and then their changes data. Now, what we have here, if you look at it carefully, is we're going to analyze each market one after the other. We're going to start with the Australian dollar. The Australian dollar, what we see is, before we even do that, we can see clearly that all the markets witnessed great increments in their trade, like large increments in their trades. So it means a lot of non-commercial traders are coming back into the markets. They are seeing this market as tradable now, and they're all falling in, placing their different position. However, where you need to be careful is this. Like I said, the data is looking not right because everything looks like it is all added up. However, where are they adding up the most is where you should focus on. And if you should look here, I'm just going to sort by most added data right now. And when we do that sort, one thing you quickly notice is the most place where they started placing where they placed the most amount of long in their last week is the European economy. So there is something that they are seeing in euro that we, the normal traders, are not seeing currently. The next place where they had the most amount of orders coming into is Japanese yen. However, because they added way more contract to the euro, doesn't mean that the euro is going to suddenly go bullish. If you take a good look at, yes, they are coming up into the euro. However, when you compare the total number of contracts, even though they added more to their long positions, they are net shorting this market. At 11%, that is bearish. So 11% of the total contracts they have in this market is bullish contract, or rather long contracts, meaning they are still heavily bearish in this market. The next place where we have that situation is the Japanese yen, where they added 37,000 plus contracts. And if you look at it again, that is 85,000 long contracts as of now, compared to 42,000 short contracts, giving them a 66% long, meaning they are slightly, or rather they are bullish in this market. The next place where they added the most is the Canadian dollar. The Canadian dollar with 29,000 increment. The total long contract is 69,800 and 800 plus. Their total short contract is 72,200 plus, giving them a near equal amount. They are almost equal, but leaning towards the bearish side, right? The British pound against the sorry, I said against. I've gotten so used to saying against. We have 28,000 contracts added on the long side, and 7,500 contracts added on the short side. The total contracts currently is 122,666. The total short contract is 64,792. This aggregates for 65% of long contract, meaning that they are slightly bullish when it comes to the British pound. For the Swiss franc, they added 19,000 contracts on the long side and 275,000 contracts on the short side. Sorry, 275 contracts on the short side. And all that brings up to about 66,500 plus long contracts and 12,680 plus short contracts, bringing them at a heavily bullish stance regarding the Swiss franc. The Australian dollar had witnessed 15,600 plus long contract added and 9,700 plus short contract added. The total contract in terms of long is 38,739 plus, while the short contract is 174,430 plus, bringing them to heavily bearish on the Australian dollar. Moving on to the New Zealand, we have the total long added at 5,500 and total short added at 888, bringing total long contracts to 62,602 and total short contract to 5,662. they are still majorly long in this New Zealand dollar market. Now, as you can see, the New Zealand dollar and the Australian dollar has been moving in similar position recently for quite some time last year up until around February, when they started to diverse. Now they are still longing in the New Zealand dollar, but they are not longing the Australian dollar in reality. The US dollar saw more longs and shorts. Mind you, unlike the rest currencies here, the US dollar is actually in millions. So whatever you're seeing here, add like extra zeros to the back, because that is where the most amount of contract actually is. Well, but what we have here is basically 30. It's about, this is more than 3.5, right? It is over 3.5. So observe it with a grain of salt. However, the total contract here still says that they are quite short the US dollar. Now, arranging it by your currency names, looking at it really carefully, what does it mean? What does this mean? It means the non-commercial traders are much more focused in the New Zealand dollar first, right? Let's arrange it by commitment in reality. This is the actual strength of the market when it comes to the non-commercial traders. This is the best buy and this is the worst buy from the non-commercial traders perspective. This doesn't mean you should go into the market and start trying to trade based on solely this data. This is just one point of view of the market, and it can change, though it changes gradually, but it can change over time. Now, looking at this over in a chart format, which is easier to read, you can see right here that the New Zealand dollar clearly is the biggest, followed by the Swiss franc, headed by the Japanese yen, British pound, and CAD. Well, but this data, I have been collecting it since 28th of April 2026, that is 3 weeks ago. And if you look at it, the total number of contracts on each of them since that particular date, we've seen that they are still having the most amount of bullish power in the New Zealand dollar, then the Swiss franc. Then the Japanese yen and the British pound are very close to each other. However, I can see much more digits when it comes to the British pound than the Japanese yen. But the percentage difference is not much from each other. Then we have the CAD and the Australian dollar, the US dollar, and the euro. This is all we can say for the COT data as of yesterday, the release of yesterday. This is the current stance, and I hope you learned something from this particular video. If you did, do well to hit the subscribe button, like this video, and share this video with someone who you think may find this knowledge useful to their trading career. See you all in the next one. We will be dealing with the weekly plan for next week. Peace.